cash actually earning you today? And what happens if rates hit 8%? We got a lot to talk about today. Today is the Sunday Daily Financial News. Let's get into it first with what does the Fed economists, right, the team that supports the Fed governors, what do they expect? If you were looking at this from earlier in the year, they were actually expecting a second half recession. What are they expecting now? Well, they have since changed their forecast, their expectations. They are now calling for the magical, the mythical soft landing. Yes, folks, the Fed now expects to stick the landing, no recession, low inflation, and positive growth. I will say net below trend growth, but positive. How could this be? Well, the rolling recession, I think, is going to play a big part of this, something we've been talking about for over a year, where one part of the economy breaks first while others take off. And then as you roll through, you see below trend growth, but not the quick down of a recession that maybe we've experienced the last 3 times. Again, this is something to pay attention to. I think there are signs that travel is weakening now. Again, Southwest Airlines in August reported below expectation bookings. We are starting to see restaurants and whatnot. So we're going to see. And here's the beauty. If the services like restaurants, airlines, if they slow, guess what they do? Seriously, guess what they do? They lower prices. Guess what that does? Lowers inflation. We're going to see, right, this Wednesday, I believe it's Wednesday, we get a CPI reading. Probably still over 3, but again, this is the report that I have been talking about for at least 6 months, where housing would crack, right? Housing, again, affordability, owner's equivalent rent, whatever you want to call it, is 43% of inflation. It's the biggest piece of the basket. And if you remember last month, 90% of the inflation reported was in housing. So, if housing cracks, as I believe the math says, and it cracks for the next couple of months, because it won't only crack this month, it'll crack next month and the month after. I think we're going to have at least 3, if not 4, good readings on housing inflation. We get that on top of used car prices falling. We get that on top of other services discounting or putting on sales. We could be at something with a 2 on it by the end of the year. 2.6, 2.7, 2.5. We will be below 3 CPI headline. We'll see. We'll see. We will be, of course, watching core as well. I actually expect core to take a bigger drop down than headline. Headline, as you know, has food and energy. Core is X, or not including oil and energy and food. So I actually expect core to be an impressive drop down if my housing calculations or shelter costs is right. Good news is it's only a few days away. I'm excited. I hope you are excited as well. In addition, later in the month, we will get what's called the dot plot, which I think is next week. What are the Fed presidents talking? Where are rates going? Are we at the terminal rate? All of that. So an exciting couple of weeks coming up. I know I'm excited. Hopefully you are as well. Let's talk about this boot camp that we just announced earlier in the year. We just had our first kind of day 0. I want to let all the folks that signed up for the boot camp know that I'm already working on adding material thanks to our conversations. There were several of you that were highlighting, hey, Michael, I'm a little bit later in life. I need to know what I can do to go quickly. So I'm already working on something, going to be bringing in an expert that I know, trust, and respect to talk about something that I think is the answer today, right? If I were to pick one thing to do today, it's going to be this, and we will line that up. Probably week 4. We got to get through the foundational stuff first, but know that I heard you. On top of that, some of you were saying, hey, I'm early in my journey. And I know, Michael, you talked about house hacking, a fourplex, as being one of your regrets. So you guys want to talk about house hacking units? I will make sure we get one or several of my buddies to do a session on house hacking. So again, thank you for your questions. Your topics, your interest will drive the 10 weeks. Our first session is this Sunday, 8 to 10 a.m. Pacific. We will alternate days between Friday, Saturday, and Sunday because unfortunately there are just no good days for everyone. The sessions will be recorded, and if you missed day 0, it is already loaded in the course. You can go watch it. It's about 60 minutes long. So I'm excited. Hopefully you are too. It should be interesting. Next, we are a day away. I'm looking at a couple of more locations here in Vegas tomorrow. Hopefully, fingers crossed, I will be able to announce a location and a date Tuesday. That's my goal. I want to sign a contract on Monday. That's my hope. I'm done looking at places. It's going to be expensive no matter what we do. But hopefully on Tuesday morning, the Daily Show, we announce a date and a location. That is my hope. So fingers crossed, we'll know tomorrow. Now let's get back to the daily financial news and the tale of two markets, two housing markets. The great Lance Lambert, Fortune editor, Twitter aficionado at News Lambert, wrote a great piece in Fortune about the tale of two housing markets. Folks, this is what you and I have been talking about for 9 months. If you are lucky enough to be shopping in the luxury market, and some of you are, please go get your discount. Go write your disrespectful offer. If you are shopping in luxury today, this might, let me think about that. No, this is the best time to get a deal, a discount, a significant discount on a luxury property. Remember, one thing that Lance shared with us, and you can go look at his playlist, Lance Lambert. San Jose, California, the epicenter of crazy house prices, is down roughly 10% in the luxury market. While at the other extreme, the entry level, it is now at a record high. Folks, it has now been validated by people smarter than me that we have a just broken housing market. Once the Fed kept rates for too low for too long, remember the numbers, 91.6% of people who have mortgages are below 6%, 82.4% are below 5%, and 62% are below 4%. Once that became true, the housing market is broken and now will be broken for a decade. Folks, you and I talked about the housing market being broken for a decade, probably the last 3 weeks. I got a note from a follower that he just attended a Bruce Norris event. Bruce Norris, if you don't know who he is, look him up. You'll be impressed. He called the California crash, the California comeback. He is a wonderful, data-driven housing expert. Somebody that I look up to because he saved my butt back in 05, 06. Bruce Norris, like I gave him full credit in the book, One Rental at a Time, saved my butt. He is now saying the housing market will be broken for a decade. Let's just say being in company with Bruce Norris and being early is a pretty good feeling. I am feeling pretty good about that, I will imagine. It's just where we are. It's just where we are. We're going to need multiple life events to move stuff forward. So again, we have two markets. Entry level is hot. If you are a flipper, know your market. That's where I would play. If you want a great deal, luxury is the name of the game. On top of that, Lance Lambert shared this amazing stat. Of the 40 largest real estate markets, metros, MSAs, whatever you want to call them, 30, that is 75% of them, are at record high for entry-level homes. Folks, you guys are telling me all the time, right? One rental at a time. We typically shop entry-level homes. That's where cash flow is, right? I mean, it's no secret. It's tough out there. It's hard. You're probably going to have to find something that's tired, that's dated, that won't pass FHA or VA inspections. That's okay. If you know where to shop, you can shop. I'm looking at days on market. I'm talking to somebody from the hub later today about a potential deal. Yes, I'm still looking, although I hope to be looking in Vegas probably over the next 30 to 45 days as I get all this housing stuff behind me. But yes, it's pretty clear where to shop today. You can't get cash flow at 8% interest paying list price. So we got to do the work. We got to write offers. And again, remember the most important part. You got to follow up. The money in this market is paid in the follow-up. You will be outpaid, you will be outbid by someone. I promise you. People that do the work, we're cheap. We know our numbers. But a lot of people who outbid us can't perform. They will back out. They will quit. Follow up. Follow up. One of the interesting things to talk about with the move-up buyer is what rate. Logan Montashami. Hopefully I'm getting better at that. Montashami. The U.S. is dealing with a savagely unhealthy housing market. 7% mortgage rates have drastically slowed it down, meaning demand, right? Buyer demand transactions. Again, remember, I'm on the hook later this month. I think September 21st, I'm calling existing home sales going under 4 million. Was the first to do that. Near as I can tell, I'm the only one calling that at this point. But we shall see, because we have been over 7% interest for 4 weeks. I believe what's happening behind 7% interest rate is there's like a pressure that's building. Because consumer psychology has taught me over the last 30 years is we don't have great memories. What happened last year is we learned that 6% was bad, 5% was good. I believe what is happening now, the longer rates stay above 7, we learn that 7 is bad, 6 is good. In addition to that, remember what we learned from Las Vegas, and many of you have validated last week. People are trading down. We now have record high townhouse and condo prices in Las Vegas, while home prices are falling. Folks, in economics, that's called trade down or switching. You can't afford a house, you buy a condo. You can't afford a house, you buy a townhouse. That is now the first-time home buyer home. This is just where we are. I think what caught a lot of people by surprise but did not catch us by surprise is rising rates squelched supply. The savagely unhealthy market is a supply-driven market. We have been here on an unaffordability scale before. 1981 is still, even at these interest rates, the most unaffordable market in the last 53 years. It's hard for you to hear that. Doesn't mean it's not true. 1981, 16.5% interest was the most unaffordable market we had. This one's bad. This one's in the top 3. It might be the silver medalist, but it's not the worst. We've been here before. But what happens at 8%? I think we know the answer, right? I think we know the answer. The real question is, when does supply come back? Everybody thinks now. I'm actually reading more and more articles about supply coming back sub 5%. I don't know. 82.4% of folks have mortgages below 5%. Maybe. We need time. I think that's the answer. We need time. How about apartment rents? Rents are falling, folks. Rents are falling in apartments, and it's going to get worse. Folks, the commercial real estate multifamily market is in trouble. We've been highlighting the pain for a year. I'm hearing from more and more of you almost daily now. For a while there it was monthly. Now it's probably, I'll say, weekly. It's almost daily. People that are LPs are reaching out to me saying, Michael, you're right. I thought I was in an experienced syndication. They've stopped distributions. Some of the folks are telling me that 4 out of 6 syndications they are in have had capital calls already? Dude, I don't have any good news. If we're in the first inning of this and 4 out of 6 of the syndications have had capital calls already, this is going to get bloody. This is going to get bad. I am so happy to be focused on residential. I'm also happy that last year, maybe 18 months ago now, we took all of our commercial debt, and thanks to non-QM and Velocity Mortgage, we refied our apartments into 30-year fixed rate debt. Folks, I put out my playbook on this channel. Some of you followed, some of you didn't, I guess. But yeah, it has been wise to kind of follow that structure. We're sitting pretty. Rates at 7 or 8%, doesn't matter. Fixed rate debt. You got to watch the apartments. Did you know that we have not only lower rents, which is income, now you have higher insurance, you have higher taxes, you have higher cap rates, which mean lower value, you have tighter or no lending, and you are very much going to have cash in refis, which are all things we've talked about here in the last year or so. Right now, they're saying there's about 460,000 apartments ready to come online in the next 12 months. That is a lot of units. That is a lot of units. Next, we had, there's been an article about cash. There's been cash sitting in the wrong place. So it'll be very interesting. I'm going to guess that One Rental at a Time fans are not the normal, right? Not the average out there, but here it is. Bankrate, another interesting article I read from Bankrate. 1 in 5, which means 20%, 1 in 5. 1 in 5 savers are getting less than 3%. I'm sorry, reverse, switch, rewind, say that again. 1 in 5 savers are not, or are, oh gosh, why can't I say this today? 1 in 5 savers, here's a third try. 1 in 5 savers are getting 3% or better. That means 80% of you are getting less than 3% interest on your savings. Today, it's relatively easy to get high 4s, if not 5% on your cash. Cash is an option. It is, sitting in cash earning 5% is an option today. It's been decades since that's really been an option. So again, if you happen to be 4 out of 5 Americans earning less than 3%, let this be a call out to shop around. Shop around. You can pretty easily earn more than 3% interest. Make sure you watch the FDIC rules and all of those things. But yeah, it's pretty shocking. What else do I got for you? Yep. So again, that's what I got for today. This is the daily financial news for Sunday, September 10th. Again, I want to thank you for being a part of the channel. Like, subscribe, comment. We will keep doing these dailies. I will record the Friday and Saturday daily financial news next. I will post them in the next couple of hours. We got a lot of stuff. We actually had a Chicago trophy property come in 40% under the debt level. Pretty shocking. We'll run through the numbers. Lots of other stuff coming for Friday and Saturday. And yes, we did attend the Lady Gaga concert yesterday. She is an amazing vocalist and a great performer. If you get the chance to see her in Vegas, I think you will be, she's a wonderful singer. She's got a great voice. So take care of yourself. Have a wonderful day. Bye-bye.